Stuck in a system that just ain't right. Gonna tear it down, gonna start a fight. Anarchy and numbers is my game. I'm the investor with no shame. Greed and corruption, that's the name of the game they play. It's all a shame. I won't play by their rules, I won't comply. Anarchy's the way. It's time to fly. I'll burn down the walls and break the chains.
And here we go. Welcome. I am Matt. This is the Anarchist Investor live, coming at you every Monday through Friday at 12 Eastern, talking about contrarian investment, markets, the economy, how to protect and grow your money and not get it stolen from some dirty banksters. A reminder, help me with the algo, little sub, thumbs up, a follow, a share would go a long way towards helping me out, helping the channel out, and helping get this very important information in front of as many eyes and ears as possible. So I'm going to pull down the banner and I'm going to pull back up what was on the share screen earlier. And this is Target, and or as other people know it, Target. We're talking about retail. I talked about retail a bunch yesterday because of price cutting and things like that. And as we can see, the reason why Target was talking about price cutting yesterday was because their earnings came out today and they were not good. A big reason why they're not good is because the consumer is not good. The consumer is not healthy, and the consumer is continuing to trade down and trade down and trade down and trade down. And so it's causing downward price pressures. A lot of people are in disbelief because things like grocery prices are still elevated because higher prices have become normalized. The bullwhip essentially increased prices based off of a supply-demand mismatch. And then retailers just decided to keep the prices high. They were able to do so because there was lots of extra money sloshing around in the system. There was a continued supply-demand mismatch. There was all kinds of pent-up demand from the lockdowns, et cetera, et cetera, et cetera. There's all these circumstances that kept prices from being able to go down in short order after they rose. Well, now you're starting to see the actual pressures in the marketplace for prices to go down, and people are in disbelief. They're still talking about inflation, hyperinflation, et cetera, et cetera, et cetera. I keep getting in fights with people online talking about the fact that we are closer to deflation than we are anything else, at least over the next couple of months. The reason being is that the economy continues, the real economy, the actual economy continues to fall apart. And it continues to fall apart, not necessarily in a way that everyone else is expecting it to, or how should I put it? Not exactly in a way that becomes painfully obvious to everyone. There's a large subset of the population that sees that the economy is falling apart. Okay. And that's pretty much, if you're like a middle income or lower, you're like, this thing is a dumpster fire. Okay. If you are upper middle income and higher, you still think like you're like, what's wrong? Things are a little bit more expensive, but my stock portfolio is up big. I can just liquidate a little bit of my Nvidia stock, or whatever. I made a bet on Target, but it didn't go too well, so I'm just gonna take some off there, and I'll use that to pay for my overpriced steak and champagne at my business dinner out on Thursday. I mean, it really is this kind of like champagne versus poverty kind of economy that we're in right now. And it's not just in the United States, it's throughout most of the Western world. Target is a perfect example of that. Target is not a high-end retailer by any stretch of the imagination. They're also not a bargain retailer. They're kind of smack dab in the middle. Like, if you're middle class, you probably do a decent amount of shopping at Target. Maybe not for groceries at the beginning of all this. Like, maybe you went to other grocery stores. Maybe you did do your grocery shopping at Target. But one thing's for sure, if you were shopping at Target like 6-12 months ago, you probably aren't shopping there anymore. You've probably traded down to some of these other retailers. One of the biggest beneficiaries has been Walmart. And interestingly enough, one of the biggest beneficiaries leading into and coming out of the great financial crisis in 2008 was Walmart. And the reason being is Walmart is literally a country unto itself. And so they have economies of scale that they can tap to outlast other retailers. They can literally cut costs to the bone. It's the same dynamic as Amazon. Amazon had the same dynamic. 2008, they both took a little bit of a dip, but they weren't hit nearly as hard as the broader marketplace. And they gobbled up market share like banshees during 2008, 2009, 2010. All right. And it was because they had these economies of scale, automation, everything worked in their favor to be able to just undercut and destroy and take market share from all the little guys, right? Main Street retail was reeling leading into 2008. 2008 was pretty much one of the nails in Main Street retail coffin. The corporate retail space, specifically these kind of low-cost providers, are the ones that are going to benefit. They benefited back then. They're going to benefit in the economy moving forward here. The other example being Costco. If you look at Costco, let's zoom out like on the weekly chart. Look at the freaking chart of Costco, man. This is because when people trade down in terms of, brand and stuff like that, not only does Costco get the benefit of being like this kind of bulk seller, okay, because people are also somewhat robotic in their behavior. So like I wrote a survival guide. I'm writing a survival guide this week on the Substack. So make sure to subscribe to anarchistinvestor.substack.com. Today I wrote day 3. It was basic expenses, right? The other day I wrote about physical health in terms of like your diet as well as activities and things like that during a really bad financial crisis. Well, one of the cost-cutting measures or one of the more efficient measures that you can adopt is buying in bulk. Now, Costco is one of those options. There's actually other options that are even more cost-effective than Costco, but people just don't know about them, right? But so a lot of people do know the brand Costco. And so what do? They trade down. So their daily stuff, they'll go to Walmart and then they'll buy stuff in bulk at somewhere like Costco, right? Which, by the way, Costco ended up putting other bulk sellers out of business back in 2008 as well. If you remember, I always get this screwed up. Kmart went out of business and Kmart was, I think, BJ's, right? And so there's still BJ's, but BJ's is nothing compared to what Costco is, right? And so Costco is one of 2 retailers that's probably going to benefit. And if you look across the landscape in terms of retail is concerned, like retail brands like Under Armour and Nike have just gotten absolutely destroyed. Now, if you look at TJ Maxx is ripping. And it's not just ripping recently, it's ripping for the last like 10, 15 years. Why is that? Well, it's because TJ Maxx sells like, scratch and dent clothing. I mean, it's like end of line type stuff, right? We're not talking about high end. We're talking about the low end. Like you go to TJ Maxx, kind of like is one step up from going to like the thrift shop, right? Like that's what you buy at TJ Maxx. These kind of retailers are the ones that are benefiting. All the name brands, I mean, like look at Macy's. Macy's over the last decade has just gotten absolutely annihilated. Since 2015, they're like down by 67% in terms of their stock price, and their business performance is because of it. All right. Now, I'm focusing on retail because that's like the story of the day, but this actually isn't like the full story. This is just kind of, it happened a little bit at a time and then all at once, right? This is the all at once part. We have to rewind things to figure out what the little bit at a time was. All right. The little bit at a time is best explained. And I'm not even going to do it on my charts because this was just so eloquently explained. If you have never watched a video on Eurodollar University's channel, or if you've never, or if you have and you just, or if you've subscribed and you just never really kind of checked in on it, this is the video you need to watch. Okay. I'm going to tell you this right now. Of any other financial video that you can watch, all right, so much of it is clickbait bullshit. All right. Even my stuff borders on clickbait. I try and be sensible and reasonable when it comes to titling things and what to talk about, not being like over aggrandizing and that kind of thing. But so this video from Eurodollar, it explains the economy in such a succinct and easy to understand way that it's criminal that no one in the government or that the Federal Reserve has condescended to explain things like this to the American public. They know this is the case and they refuse to acknowledge it. So they end up gaslighting you and basically lying to you about how strong the labor market is, how strong the economy is, et cetera, et cetera, et cetera. In 2008, there was, like, everyone talks about, like, the Great Reset is coming. The Great Reset is coming. Well, there was already a Great Reset. It happened in 2008. And what happened was the entire financial marketplace was a casino, even worse than the casino now. Well, actually, I don't know. That's arguable. But it was a casino. And there were so many chips on the table. And, the hot shooters were Goldman Sachs and JP Morgan and Bank of America and Wells Fargo. And they rolled freaking 7. And all of the chips came off the table. All right. But the problem is everyone wanted the game to keep going. So they all took lines of credit and IOUs and stuff like that. And the house basically gave them huge amounts of money to just keep the game going. But there's not really anything underlying it. And it's also based off of just completely inefficient use of money. Like, it's not like people got a line of credit from the house and then went and like started a new business to try and like gain back what they lost by wagering on the table. No, they just went right back to wagering exactly the same way that they did before. And so in this video, you have the most poignant chart that anyone should be focusing on right now. If they're talking to you about economics, personal finance, investment, et cetera, et cetera, et cetera, this is the chart everyone should look at. Okay. I understand that this is a very giant statement I'm making, a very broad, sweeping statement. Okay. But very few, if anyone, is talking about this. And this is the story. In 20 years, people will go back and they'll be like, holy crap, how did we not pay attention to this? This is US real GDP. And before I forget it, let me share in the comments section the link to this video, okay? And I apologize if you're like listening and you don't exactly have access to the comment section. Go on YouTube and look up Eurodollar University. The title of the video is called "The Standard of Living Decline in America is," and I forget what the full thing is, but like just put in that, you'll find it. All right. So this chart shows U.S. real GDP, meaning adjusted for inflation. Okay. And you got to remember that Eurodollar University's position is that the actual inflation that we're seeing in the marketplace right now isn't monetary inflation so much as it is still the lingering effects of the supply disruption. And the fact that monetary, when you piece this together with what Simon at Uneducated Economist talks about, you understand that we've had tons of printing and it hasn't resulted in the inflation it should have. Okay. Now, that doesn't mean that we haven't experienced inflation. It doesn't mean that we won't experience a ridiculous amount of inflation in the future. It means that everyone in the federal government, including the chairs at the Federal Reserve, the chair, as well as the commissioners at the Federal Reserve, are baffled by the fact that they printed so much money. And in one fell swoop, we got, 9%, 10% plus. Some people say 20% inflation. Okay. And then all of a sudden they started cutting rates and the inflation rate started coming back down again. How could that happen? And on top of that, how could it be that in 2008 we printed all of this money and we just didn't get ridiculous amounts of inflation? Well, it's because there's all these dark pools, these black holes of just sucking sounds, pulling the money and holding on to it. Okay. And the danger is when the money actually gets released. But what people don't understand right now is that the danger isn't that just yet. The danger is the fact that the economy is essentially falling apart from the inside and collapsing because that money's being held on to. And we're going to end up seeing a whipsaw. You're going to see, think of Depression era United States unemployment rise, right? And then think 1970s inflation after that. Okay? That is the whipsaw that's about to happen. All right? And this chart is showing you why there is such a problem in the economy right now that no one is talking about. This is the 60-year trend dating back to the late 1940s. So just post the Great Depression, or at the tail end of the Great Depression, okay? This trend line for 60 years has almost, you could set your watch by it. U.S. real GDP growth, sometimes it's a little higher, sometimes it's a little lower, but it is on this trend line for 60 years. In 2008, it falls off and never returns back to that trend line. So you might say, well, why does that matter? Well, what matters is we've continued to have population growth. We've continued to have price pressures that increased. Like I said, it's not that we haven't experienced inflation. They're baffled by the fact that we haven't experienced more inflation than we have. But that means that for there to be an actual recovery somewhere along the line, you have to get back to this line again. And the only exception being, wide scale depopulation, which, by the way, I wouldn't put it past some of these ghouls that are running things, right? At least as, on their to-do list. But that being said, we haven't had that. There are tons of people more today than there were back in 2008 in the United States, whether it be by, birth death rate or, people coming across the border, both documented and undocumented, right? There's just more people. And yet at the same time, real GDP growth has lagged. And in fact, what's even more alarming is it hasn't just lagged, it's continuing to lag further and further and further behind. And this delta, this difference between the dotted line and the orange line is why there are a ton of people in the economy that feel like it's left them behind. They feel like they can't participate. Even if they were to try, they feel like they have no opportunity. They have no options. They have no hopes for, I wouldn't just use the catchphrase like, gainful employment, like employment that could then be a stepping stone to something else. They don't even have those hopes. They don't have hopes of working for McDonald's and then, becoming manager and then going on to something else. They don't have those hopes. They've just opted out, right? Part of the reason why we've seen increasing levels of drug abuse and depression and suicide and violent crime in certain instances. And granted, violent crime has trended down over a period of time, but recently it has ticked back up again. And you've seen instances where the violent crime, like the degree to which a violent crime act happens, right? Like that's also in flux right now. But so a lot of these problems stem, or at least are in part due to this gigantic, I would call it gap or rift between where the economy should have been headed and where we are right now. And you have to ask yourself, all right, so what happened in 2008? What caused this gap? What caused this difference? Why did all of a sudden we have this tectonic shift in growth and productivity in the United States? And by the way, this isn't just germane to the United States. It's happened in other westernized countries as well, like in Europe. Well, it's because in 2008, we didn't let anyone fail. The financial crisis was supposed to clear away the dead wood, and it didn't. And so now instead, you have a lot of those black holes that are those sucking sounds are companies that should have been bankrupt a long time ago and replaced by new companies that when you put capital to work there, there's actually a multiplier effect. But we don't have that. We have ever increasing transfer payments to try and keep people afloat because they don't have options for gainful employment and upward mobility. Because Walmart and Amazon are very well positioned for the economy ahead. Okay. But there's no up and coming Target. There's no up and coming Costco. There's no up and coming Home Depot or Lowe's. There just isn't, right? The vestiges of the past that used to be the local kind of like Main Street type of feeling companies that had some growth trajectory and they could, get to the top of the hill, that doesn't exist anymore. There aren't any. And part of the reason why is because a lot of these companies are languishing. Like, perfect example being something like a Macy's. Like, I don't understand how Macy's is still in business. It took years and years and years for Nordstrom's and for Sears to fall apart, okay? Because the economy doesn't work for the average person that wants to start a business and become a competitor to these big companies. The economy works for the big companies that get the mix right, and then all the other big companies fall off and they just gobble up the bones. And when they gobble up the bones, they don't gobble up all of the workers. They take a couple of them along, but then the rest of the workers are now fending for themselves, trying to go back and find a job for another, giant ghoul of a company. And chances are, if they were getting paid $20 an hour before, now they're getting paid $15 because there's more competition for less crappy jobs at these big corporate retail companies, right? We're also entering into a period of time where even these companies are beginning to cut headcount because they want to maintain the profitability. They're going to continue to gobble up market share. They're going to continue to control expenses. And by control expenses, they mean fire people. But we have an economy that doesn't work for tens of millions of people in this country, and it's also being felt in other countries. You want to know why, things like Black Lives Matter protests / riots happen during 2020 and 2021? Okay. It's not just injustice associated with the criminal justice system. It's also people that are poor as fuck and they are sick and tired of it because a lot of them, despite the racial BS storylines that happen within the media and, whether it's media or even the alternative media takes this stuff and runs with it. Okay. Those are BS storylines. This idea, like the racial division and stuff, there are hardworking people everywhere. It doesn't matter the color of your skin, your religion, your how you identify. It doesn't matter. There are hardworking people that are getting screwed over by the economy. And so they're fighting amongst each other. It's crabs in a bucket, right? And the powerful will do everything to turn the attention away from themselves, right? They will try and pit all of the crabs against each other. The fisherman that put them in the bucket to begin with and is probably like shrinking the bucket. Well, no, the analogy would be growing the bucket or turning up the temperature on the cauldron that they're all sitting in. Okay. Is basically saying, well, it's not my fault. I mean, this is just the game. It's all their fault. They're trying to stop you from being able to get out. So you're going to die. So they're making you fight against the other gladiators in the cauldron to try and get out of the bucket or get out of the cauldron. Meanwhile, they're like, oh, it's not my fault. Right? I'm not trying to stop you. I'm trying to do all this good stuff. Hey, look at this. I paid more taxes and those taxes got sent to more poor people that the system is screwing over. But what they don't tell you is the system is screwing them over at a much faster clip than the taxes and the transfer payments are being made to those people. Not to mention the fact that a lot of transfer payments end up going to places, not just people, companies specifically in the form of corporate welfare that are less efficient. They don't use that money as efficiently as other places. And no, this isn't an argument to send more money to Walmart. It's an argument to free up capital so that the local mom and pop shop can expand and go from 2 employees to 5 employees. But we don't have anyone championing that. Like, there's no one championing that. They might pay lip service to it, but then when you look at the regulations and the taxation and the spending and all this other stuff, come on, actions speak louder than words. And the retail sector is screaming that this is the case. Like when retail goes down, it's bad because people will conduct retail therapy. When they feel crappy, they'll go buy some stuff. They're not buying stuff. Right. And it's showing. There's a handful of companies that are going to benefit. All the rest of them are going to be harmed. Tons of people will lose their jobs. It's already happening. And it is mind blowing that people still want to hold on to this narrative. Like, oh, the US dollar. Here, let me pull what the US dollar is doing right now. OK, you would think it's depreciating. It's falling off the face of the earth. OK, it really isn't. I'm going to put the small me on the screen. Here we go. What's the US dollar doing right now? US dollar's fallen off a little bit from the heights of 2022, but it ain't getting destroyed. Now, relatively over time, yeah, the purchasing power is dropping. Okay. But at least over the near term, the intermediate term, no, it's not where it's going. If anything, it's more than likely that this is a consolidation pattern and the dollar is going to move higher. Why? Safety. Because the real economy is not in a good place. And we're in a cycle right now where the Federal Reserve is raising interest rates and causing a dollar shortage. The M2 money supply is declining for only like the second time in history. It might be the third time because there was like a little blip in, I think, the 80s. But it might be only the second or third time in history. The other time was the Great Freaking Depression. M2 money supply is shrinking, and it's not shrinking slowly either. It's like considerable. Okay. And unfortunately, people have been yelling fire in a crowded theater for so long that a lot of people they have fatigue about this coming situation. I've followed YouTubers for the last 3 years that have been calling for a market crash, and it hasn't really happened. They got a little bit of it in 2022. They got drunk on it because people followed a lot of them. Oh my God, everything's going to zero. And then what happened? A bank failed, 2 banks failed in a week or 2 weeks, and then the Federal Reserve on the back end kicked the can down the road again. The other misunderstanding here is that a lot of people think the Federal Reserve and the federal government are going to, allow what should have happened in 2008 to happen here. And they just aren't. They're going to try and facilitate it for as long as like politically they can stand it. But really the next move here eventually is actually releasing that cash from those places where there are those black hole kind of sucking sounds. But it won't be until they haven't learned their lesson yet. They have not learned their lesson yet. They allowed those black holes to come into being by allowing those stars, those companies, to basically die but not go away. They kept them alive like zombies. And that's what's sucking all of the cash out of the system right now, or at least holding on to it and using it in very inefficient ways. Meanwhile, the people that know how to like steal a little bit of that money as it's going into the black hole, they're the ones that are doing well, right? Everyone else is being screwed by the situation. But so that's what I'm looking at in terms of the overall arc of the economy and the market right now, right? It's not good, and it's not getting any better. But at the same time, I think a lot of people are being pushed to gamble because of that. They're being pushed to put what little money they have left, if not borrow, to put money on the table because they're worried that they're being left behind, and they can't make a better life for themselves by working hard. They feel like they have to win the lottery, and it's such a low probability bet. And at the same time, all these ghouls are more than willing to take your money if you want to try and win the lottery. And they'll let someone every so often win the lottery because it keeps the dream alive. But the vast, vast, vast majority of people have lost faith. And so that's why they're gambling. And they might put on a good show. Like if you're a Bitcoiner and you're up, 40, 50, 60, 1,000% in your Bitcoin holdings, you're acting like life is good. But again, if it's just paper profits, good luck. Those paper profits can turn into paper losses really quickly. And then they can turn into real losses, especially if you're dealing in leverage. All right, let's look around the market really quickly. Diatribe over. Black pill done. Doesn't everyone feel fantastic? It's Wednesday. Yay. Black pill done. But let's look around the markets and just see what's happening. The casino is waiting for Nvidia's earnings. Okay. This is also the other thing to look at. Back in the day, if Target had posted the earnings that they posted and the price cuts and the warnings, and McDonald's posted a warning and Starbucks posted a warning, even Walmart's posting warnings, and they're all cutting headcount. If this happened, the casino would have been getting absolutely obliterated. It's not. It's just holding near all-time highs because they're just waiting. They need one of those handful of companies that are those champagne kind of companies that are still winning. They just need that to keep winning in order to keep pushing this thing higher and higher and higher and higher, right? Keep on keeping on. We'll see if that happens. Someone posted the other day, I think yesterday, last night, they posted, will Nvidia be able to beat earnings again this report? And I responded, well, as long as they can keep opening shell companies that they start with, $1 million and then they put in $10 billion worth of orders for GPUs, but never have to pay. Yeah, they could keep beating earnings because they get to report that order, even though they didn't really receive any money. And it's their $1 million that allowed the firm to open up. That Ponzi scheme can last as long as it doesn't, right? But when it finally fails, watch out. So the casino's flat, slightly down in some places. Dollars has a little bit of strength today. Again, the question is going to be, where does it go next? It just seems like it's kind of consolidating around a range here. It could go either way. My thought process is it's going to go higher with economic weakness, and specifically, finally, the casino catches up to reality. And that'll push the dollar higher, or at the very least, it'll maintain its value because it will be still looked at as a safe haven. All right, oil's down today. Again, oil continues to be weak, and we're going to see how this plays out. If you do see a crash in oil, watch out. I mean, that'll be the actual event. And here's the thing to remember. We're on shaky ground right now, but there has to be a straw that breaks the camel's back. Okay? In 2008, it was oil. In 2008, the Federal Reserve realized that stuff was going sideways. They continued to lie to the American public, but they started cutting rates. And in cutting rates, that money was deployed, but it wasn't deployed into productive places because all of the supposed productive places were illiquid. All of the banks were illiquid. They were underwater, right? All of those debt bets went bad. So where'd the money go? It went into gold. It went into oil, right? It's going to go somewhere. It's going to be put to work somewhere. That's where it went. Does the same thing play out this time? Who knows? I mean, we could just see oil crash, especially if all of a sudden the Federal Reserve is like, I fully anticipate, like I said, I anticipate them to continue to try and prop up this just awful market that doesn't work for everyone. If they all of a sudden have a moment of conscience and they were like, you know what, let's just stop screwing around with things and just leave everything where it is and see where the chips fall, you could see oil crash along with the rest of the market. And that would probably be the least bad situation, believe it or not. But if you see them come to the rescue, right, with their Ben Bernanke helicopter, oil's going to rip, and then the 2008 process, or at least the 2007 into 2008 process, will all lay out the same way again, okay? Because the consumer is already screwed. Try and put on top of that, $100 barrel oil and, $4.50 gas. See what happens then. But yeah, crude oil is weak today. And actually, let me zoom in here to the daily charts to show you how everything's working out. Yeah, it's weak today. There was actually a little bit of an inventory build, which shows you that there's still not a huge amount of demand, but they're just not also creating a ton of supply either. So that's why, the market dynamics are what they are with oil right now. Natural gas continues to rally. Look at this. So natural gas, I would imagine in anticipation of everyone cranking up their air conditioner, if you run on natural gas power plants, et cetera, as well as just the idea that money has to go somewhere, right? So this also could be a super early front run of winter, but I would doubt it in May. You usually see that happening in like July, August timeframe. So we'll see what happens with natural gas. It's been a complete dog of a commodity for a long time. We'll see if it continues this winning streak. Copper has a revaluation today. Tons of people taking profit on copper. Again, when you see these big commodity moves like downward like this, a lot of people think like, oh, well, that's, just people moving that money elsewhere, right? Like, and so they'll immediately, maybe they're moving from copper into natural gas or whatever. A lot of times especially when you see a commodity move like this, okay, they're taking profit and then they're probably putting it in dollars until they wait to see what the next setup is for the next move. Okay. They might also be putting in something like gold or silver, but obviously that isn't happening today because both gold and silver are down. My anticipation is that when they put the money to work, they weren't putting it to work in, productive assets that were going to generate demand for copper. They just put it into copper because copper is something that has some intrinsic value. As that price in copper went up, now a lot of people are sitting on a lot of profits. Same thing with gold, same thing with silver. So they need to take a little off the top. So now we get to see whether or not the rally continues or whether or not it falters. A lot of people are taking profit. They're going south with at least some of their profit and keeping it in cash. Guarantee you. And probably locking it in. And we'll look at fixed income in a second. Probably locking it in at 4 or 5% yield. Lumber's up a little bit. Again, we had a pop in lumber just because of some, sawmill closure news and things like that. Remains to be seen whether or not this resumes its downward trajectory or if this actually kind of holds some value and moves higher. But again, economic activity is not improving. So we'll see whether or not there's demand for lumber going forward or not. What else am I looking at? Aluminum continues to be strong. Again, trade tariff talks, also money being put to work in certain places. where there's actually intrinsic value and industrial demand for things. Palladium continues to be weak here. It caught a little bit of a bid off the lows back here in February, but still, this, I mean, it could be forming a bottom, but again, there's nothing that doesn't say that this couldn't just, march sideways and then fall off again, depending on what the economic environment looks like in the industrial environment. And uranium continues to kind of just hold after this profit taking from the top here after this big move. So continue to watch that as well. All right, that's the main casino. Let's look at fixed income really quickly. High yield bonds, little weak today. Okay, again, we're still mucking around with this resistance line. We'll see what happens. A lot of people are talking about, oh, well, the indexes are up and, this is up and that's up and risk assets are up. Well, guess what? High yield bonds are not, they bounced a little bit, but they're not rallying hard. So the conviction in those moves, like in the indexes and in the broader casino, I'm not seeing it here. So I'm not sold. Any of that move higher to me just seems like more people continuing to do more of the same, which means there's no fundamental reason why those things are going higher. So high yield bonds continue to be just kind of in limbo here, waiting to see what the next move is, higher or lower. U.S. Treasuries, there is selling in U.S. Treasuries today. So maybe some of the commodity money isn't moving into U.S. Treasuries. It's all being put into the dollar just to kind of sit there and see what the next move is. Again, like I said, believe it or not, NVIDIA is going to be kind of like a market moving event, which is ridiculous. I mean, a company that creates, graphics cards, okay, is going to be the company that everyone looks to see whether or not we continue the party or whether or not it's last call, right? Just is what it is. We'll see what happens after the bell with those earnings. What else am I looking at? All right, let's finish up with crypto really quickly. Bitcoin's up slightly right now, which is better after a little bit of profit taking. Now, if you notice, if I zoom in here, again, this is a positive sign so far, okay? It ripped through 69,000. What did I say yesterday? I wanted to see it come down and retest 69. It tried to retest twice and held, all right? If we now get a subsequent rally, that means that the party continues in Bitcoin. It also means that, and this is marking time too, because like I said, Bitcoin trades with the semiconductors, right? It is a technology themed investment until it isn't, right? This is waiting for NVIDIA's earnings, believe it or not. And people are like, well, GPUs don't farm Bitcoin. Why does that matter? That doesn't matter. The way people think with money in terms of, groupings of investments, it trades with NVIDIA. It trades with the semiconductors. It's waiting to see what the semiconductors do after NVIDIA's earnings. All right. If you see this rally along with NVIDIA, it's just further confirmation that that pairing is correct. It's also further confirmation that risk on trade is still in the works. It doesn't mean that that's going to be the way it is indefinitely. It just means that that's what the pairing is. But so Bitcoin's up a bit today. The broader crypto market is down in terms of the market capitalization for crypto. So that just means that Bitcoin is outperforming a little bit. And it also means that Ethereum is taking a little bit off today. Again, huge move. It's moving sideways. Some people are taking profits on it. We'll wait to see what happens after kind of the smoke clears here, whether or not there's another leg higher or not. Most of the crypto market is weak today. A lot of red across the board. Again, that comes on the heels of big moves, especially after the Ethereum ETF news. There's all kinds of stuff coming out about that. I'm super excited. I have a bunch of interviews lined up, one of which I just confirmed with Aaron Day. So if you watched the first part of the Patrick Smith interview, I invoked Aaron Day in the first part of the Patrick Smith interview. And that's because Patrick just did an interview with Aaron, and Aaron is raising the alarm bell. Crypto is under attack. It has been for a while, and there hasn't really been any resistance is the only word I can use. There hasn't been really any resistance from the crypto community. I think a lot of people saw dollar signs and they rolled over and played dead. And that's basically what's happening. Aaron, I'm going to be interviewing him next Friday, and so that interview probably won't drop until maybe a week after that. But tomorrow, it's my intent. Tomorrow in the evening at 5 p.m. Eastern, I'll be airing part 2 of the interview with Patrick Smith. That is more kind of like philosophical, political, the theory of anarchism kind of part of that interview. So that should be super interesting, especially if you're not really kind of familiar with some of the tenets of anarchism and that kind of political theory that goes with it, as well as some of the different, I'll call them flavors or sects of anarchism that are out there. And then on top of that, I also have another interview with Vinny Barbosa that is going to drop next week, early on in the week. So if that's not enough to get you to subscribe, I don't know what is. But if you aren't subscribed, definitely, or if you're not following, depending on what platform you watch or listen on, please do me the favor and give me a sub or a follow, because that will help a lot. And like I said, those are some fantastic interviews coming up. I have more interviews lined up for the future that you'll also get notification of. So there's that. And then the final reminder is I am giving away 4 annual paid memberships to the Anarchist Investor Substack. So make sure to be at least a free subscriber over at anarchistinvestor.substack.com in order to be in on that drawing. And that's going to take place on June 3rd. So with that, we made it through hump day. It is done. We are more than halfway through the week. Fantastic. We're on the downside of the week moving forward. We got a little bit of a momentum, and we will see what happens with NVIDIA after the bell. If you don't follow me on X, I will be probably tweeting some stuff about the NVIDIA earnings and the price action afterward later on this afternoon, probably about 4:30, give or take, whenever they let those numbers go. And with that, that's all I got. I hope everyone has an absolutely fantastic rest of their afternoon here on Wednesday. I will be back at it tomorrow at noon Eastern here live tomorrow, Thursday. So with that, I want to thank you all. I appreciate you. Peace.
Stuck in a system that just ain't right. Gonna tear it down. Gonna start a fight. Anarchy and numbers is my game. I'm the investor with no shame. Greed and corruption, that's the name of the game they play. It's all a shame. I won't play by their rules. I won't comply. Anarchy's the way. It's time to fly. I burn down the walls and break the chains. Shatter the illusions. Expose their games. The stock market's a stage. I'll steal the show with my rebellious spirit. Watch me grow. Burn down the walls and break the chains. Shatter the illusions. Expose their games. The stock market's a stage. I'll steal the show with my rebellious spirit. Watch me grow.